Okay, let's unpack this. Imagine a financial flow, right, into an entire continent, an engine really for economic activity and direct support.
Hmm.
Not only is it massive in scale, but it's also, well, incredibly stable, resilient.
Yeah.
We're talking sums reaching $100 billion a year. And the crucial thing, this money isn't mostly from governments or big corporations.
No, that's the key. It's coming from people.
Individuals.
Yeah.
Supporting their families, their communities back home.
And what's so fascinating, I think, is exactly that point you're making. It's a grassroots thing, isn't it?
Totally.
The cumulative effect of, well, countless individual acts.
Yeah.
Solidarity, responsibility, remittances that money sent home by Africans living abroad. They've kind of quietly become this huge financial force.
Huge, but sometimes overlooked, maybe.
Definitely overlooked sometimes, but shaping the continent's development in really significant ways.
Exactly. And that's what this deep dive is all about. We want to shine a light on that force. We're diving into, well, a stack of sources you've shared with us, articles, reports, data, and we're trying to pull out the most important nuggets of knowledge about this remittance engine, as we're calling it.
Right.
Our mission really is to get a handle on its true scale, its profound impact from the family level right up to national economies, and also the challenges,
Yeah, the things holding it back.
and the opportunities too, especially with digital tech and this critical need for better data we keep seeing mentioned.
We want to get beyond just the huge headline numbers, right? And really understand what it means on the ground, why it's so reliable, and how it's likely to change.
And I think we're going to uncover some genuinely surprising things along the way.
Oh, I think so.
Like how this money actually stacks up against traditional aid and investment. It's kind of mind-blowing.
It really is.
Or how, for millions, it's literally the difference between, well, having food or not.
The quote about that is very powerful.
Yeah. And how something seemingly technical, like data collection, is actually fundamental for unlocking its future potential. So yeah, get ready for a deep dive into this powerful flow of money driven by people, changing lives across Africa, one transaction at a time.
Okay, let's start, as you suggested, with the scale.
Yeah.
Because honestly, until you really grasp the magnitude, it's hard to appreciate just how significant this all is.
It really is, isn't it? The headline numbers that jump out from our sources are, well, frankly, they're staggering. We're talking about Africans in the diaspora sending home, consistently now, over $95 billion.
Every single year.
Every year. It's not a one-off.
Exactly. And the latest data point we have from the sources, specifically for 2023, it pushes that figure even higher. It's a remarkable $100 billion.
$100 billion US dollars.
Let's let that sink in for a moment.
Yeah.
Flowing into the continent in 1 year. Mostly from individuals.
And putting that figure into context, well, that's where its real significance just becomes undeniable, I think.
Right. The sources make a direct comparison. This $100 billion in remittances versus other major external financial flows that African countries get.
Like foreign aid.
Exactly. Yeah. Official Development Assistance, or ODA. Foreign aid. In 2023, that figure for the whole continent, $42 billion.
Okay. $42 billion.
A look at foreign direct investment, FDI. Money flowing from abroad into businesses, projects, infrastructure. That was $48 billion in 2023.
48. Okay, so if you do just the quick math there, ODA, $42 billion, FDI, $48 billion. That's what, $90 billion total?
Totally combined.
So the $100 billion in remittances isn't just a bit more than one or the other. It's more than both of them put together.
More than both combined. Yeah.
That single comparison, it just completely challenges the usual story about external finance for Africa, doesn't it?
It really does.
It highlights the sheer scale of this people-driven economic force. It means, like the sources say, that remittances from individuals abroad are collectively the largest single source of external finance flowing into the continent today.
And what makes it even more compelling, as the sources really highlight, is the trend over time.
Ah, yeah, not just a snapshot.
Right. Looking back over the past decade, remittances to Africa, they've shown really strong growth, up by 57%, a remarkable increase.
57% increase in remittances over 10 years. Okay.
Now, contrast that with the trend for foreign direct investment. Over the same 10 years, it actually declined by 41%.
Declined. Wow. Declined by 41% while remittances grew 57%. That's a huge divergence.
It's a huge divergence. And it's not just, a statistical quirk. This widening gap, it signifies a fundamental shift.
What kind of shift?
Well, it indicates that while those traditional forms of external investment like FDI have become less reliable or maybe they've shrunk, the financial support from the diaspora, it's grown consistently, substantially. It's becoming more and more central to the continent's financial picture.
That trend, that 57% rise versus 41% fall, it points to something really critical you mentioned earlier, resilience. The sources really stress this point, don't they? That remittances are just inherently more consistent, more resilient than other financial flows. Why is that, do they say?
Because the driver is personal. That's the core of it. Even when the global economy hits a rough patch, well, when financial markets are all over the place, or maybe aid budgets in donor countries get squeezed,
Yeah.
the commitment of individuals to support their families back home, that often stays incredibly steadfast.
Right. It's not driven by market sentiment in the same way.
Precisely. The sources emphasize this. Investment capital. It can be flighty. It reacts sharply to economic wobbles, political instability.
Sure.
And aid. Well, aid can be tied to political priorities or it comes with conditions.
Strings attached.
Strings attached, yeah. But remittances, they're driven by these deep personal connections, obligations, family ties.
So that makes them incredibly stable, reliable for the families getting the money and also for the national economies getting that foreign currency.
A consistent source of foreign exchange, yeah. Even through major crises like global recessions or, well, the recent pandemic.
And the sources also dig into why these flows are not just resilient, but why they've also been increasing over time. What are the underlying drivers they identify for that growth?
They point to several key factors. First, there's the persistent reality of income gaps.
Right. Disparities.
Income disparities between the countries where African migrants live and work, often Europe, North America, the Middle East, and their home countries on the continent. The chance to earn more abroad makes sending money home both possible and, frankly, necessary for many families.
Makes sense. What else?
Second, political instability. In certain parts of Africa, this can push people to look for more security, better economic opportunities elsewhere.
Creating new diaspora communities.
Exactly, who then maintain those financial links back home. And thirdly, and this is an increasing factor, the sources note, climate-related migration pressure.
The climate angle.
Yeah. Environmental changes, disasters, they displace communities, they drive people to seek livelihoods elsewhere, including abroad. And this leads to new patterns of remittance flows.
So those drivers, income gaps, instability, climate change, they really underscore that remittances aren't just about, say, economic betterment. Often they're a response to basic necessity, to risk, the fundamental need for security, for support.
Precisely. And understanding those drivers helps explain why we see this resilience and also that upward trend in the numbers.
Okay, so the scale is huge, bigger than aid and investment combined, and the flow is incredibly resilient because of those personal drivers. But let's really shift gears now. Let's move from the big macro numbers to the micro reality. What does this $100 billion actually do on the ground? What's the direct impact on families, on individuals?
This is where the data, it really becomes human, doesn't it?
Yeah.
Remittances, they aren't just abstract figures on a balance sheet. For the millions of families receiving them, they are, quite literally, lifeline funds. They address the most essential needs.
Like what specifically? What do the sources detail?
Well, our sources give some vivid detail. It's directly funding school fees, making sure kids, who might otherwise have to drop out because there's no money, can actually stay in education, build a better future.
That's huge. Education access.
Absolutely. It's covering crucial hospital bills, other healthcare costs, providing access to medical treatment that could be life-saving, but is often just financially out of reach for so many families.
Wow. So access to education, access to healthcare, I mean, these are the absolute fundamentals of well-being, aren't they? Opportunity.
They really are. The sources also highlight remittances helping families build homes or significantly improve the ones they have. That gives stability, security, a tangible asset.
Right.
And, importantly, they're used to seed small businesses, entrepreneurial ventures within local communities.
So not big corporate investment, but grassroots stuff.
Exactly. This is money that might start a small shop, maybe buy some equipment for farming, or fund a local service. And that creates jobs, creates economic activity right there in the community.
The quote you mentioned earlier from Cristina Duarte, the UN Special Advisor in Africa, the sources included, and it's incredibly powerful. It really brings this reality home.
It does.
She says, and I think it's worth quoting directly because it just captures the essence so well, for many, they are the difference between survival and destitution, between going to bed on an empty stomach and having a meal. That just lays it bare, doesn't it? The fundamental impact. This isn't like pocket money for extras for many people. It's about basic needs, avoiding extreme hardship. basic dignity.
It really underscores that beyond just the financial transaction itself, these transfers are profound acts of solidarity.
Yeah.
They symbolize this deep generosity, this resilience, this unwavering connection of the African diaspora to their families, their communities back home. The sources point out these remittances, they serve as a vital lifeline for over 200 million Africans.
200 million people. That's a staggering number.
It's a huge number of people whose well-being is directly supported by these flows. It's really a testament to those enduring bonds of family, of community, that just transcend borders.
And this significant grassroots impact, it must translate into substantial macroeconomic benefits for the countries receiving the money too, right?
Oh, absolutely it does.
Yeah.
At the national level, remittances are a major, consistent source of foreign exchange. This inflow of foreign currency, it's critical for countries. It helps stabilize their national currencies in the global markets, improves their balance of payments.
Any specific examples?
Yeah, the sources specifically name countries like Nigeria, Egypt, Ghana, Kenya as prime examples. Places where these flows represent a really significant chunk of their foreign exchange earnings. It helps buffer them against external economic shocks.
Okay.
And furthermore, by boosting household incomes, especially in low-income communities, remittances increase overall consumption. They stimulate economic activity at a local level, and that can have a ripple effect right across the national economy.
And this brings us back to that comparison with other external flows like aid and FDI. The sources really hammer home the distinct advantages remittances have, don't they, in terms of how they arrive and what they mean for the recipient country?
They really do. Unlike foreign loans, for instance, loans come with interest payments, right? That can pile up into huge national debt burdens for generations.
Right. Debt traps.
Remittances, though, they're essentially gifts. They come with no interest attached.
Okay, no interest. What about aid conditions?
Well, unlike a lot of official aid, which often comes with specific policy conditions, recipient governments have to adopt certain reforms or economic policies.
The strings attached again.
Exactly. Remittances carry no policy strings. They're unconditional transfers. And crucially, as the sources emphasize again and again, they go directly into the hands of families and individuals.
Bypassing bureaucracy.
Bypassing layers of government bureaucracy, administrative overheads, intermediaries that can sometimes delay or divert or just reduce the efficiency and impact of other kinds of funding.
That directness, that seems really key to why the sources describe them as such a potent force for grassroots development.
Yeah.
The money is in the hands of the people who need it most, and they decide how to spend it based on their immediate needs, their priorities, education, health, starting a small venture, whatever it is.
It's bottom-up development, fueled by individual agency, by need, rather than just top-down planning.
And if we look at the broader global development picture, the contributions of these remittance flows seem very much aligned with key goals, right? The sources link them directly to the Sustainable Development Goals, the SDGs.
Yes, absolutely. The sources highlight a strong alignment between remittances and several of the UN's SDGs. It really demonstrates their wide-ranging impact. They mention connections to SDGs 1, 2, 3, 4, 5, 8, 10, and 13.
Okay, maybe you walk us through a few of those. How do remittances connect?
Sure. So SDG 1, no poverty. By providing that stable, consistent income, remittances directly help lift families out of extreme poverty, improve their living standards. Simple as that.
Right. Basic income support.
Then SDG 2, zero hunger. Increased household income means families can afford better food more consistently, directly addressing food insecurity.
Okay. Health.
SDG 3, good health and well-being. Remittances, covering medical expenses like we said, facilitating access to essential health care, better health outcomes. SDG 4, quality education, funding school fees, materials, making sure kids can go to school, stay in school, improving prospects.
You mentioned women earlier, too.
Yes, SDG 5, gender equality. Women often play a central role in receiving and managing remittances in the household. These funds can empower women economically, increase their decision-making power, support female-headed households.
Interesting. What about economic growth more broadly?
SDG 8, decent work and economic growth. Remittances stimulate local economies. They increase demand for goods and services, provide capital for small businesses, which then creates jobs.
And reducing inequality.
SDG 10, reduced inequalities. Remittances tend to flow disproportionately towards lower-income households and communities, so they act as a kind of income redistribution mechanism, reducing overall inequality within a country.
And finally, the climate connection again.
Yeah, SDG 13, climate action. It's a bit complex. Climate migration is cited as a driver of remittances, but the funds themselves can also help families recover from climate-related disasters, providing resources for rebuilding, for resilience. Though, yeah, the sources note that complex link, sometimes remittances are a consequence of climate vulnerability.
Wow. It's a powerful illustration, isn't it, that this money is doing so much more than just balancing national accounts. It's contributing right across the spectrum of human development challenges.
Absolutely.
Addressing basic survival, building human capital, supporting local economies. It's quite something.
It really is a testament to the comprehensive impact of these personal financial commitments.
Okay, so with all this money flowing, it's natural to wonder, where exactly is the bulk of it going? The sources give us a pretty clear picture, mapping out the top receiving countries on the continent. It's fascinating to see where it's concentrated.
It is indeed. Our sources provide a list, the top 10 African countries benefiting most from diaspora remittances in 2024, based on the latest full data from 2023.
Right.
And this list, it highlights not just the scale, but also the specific geographical areas where the contributions from particular diaspora groups are having the largest impact, at least in terms of the sheer volume of money sent.
Okay, let's walk through that list. Who's at the top? Who received the most in 2023?
That would be Egypt, with a truly massive $22.7 billion.
$22.7 billion. Wow.
The source notes this puts Egypt right at the top, globally, among African nations for receiving remittances. It just underscores the incredibly deep, powerful connection between the large Egyptian diaspora around the world and their families and communities back home.
Must be vital for the Egyptian economy.
Absolutely vital. Supporting everyday expenses for countless households, funding community initiatives, a huge inflow.
Okay, nearly $23 billion into Egypt alone. Who's number 2 on the list?
Number 2 is Nigeria, receiving $19.8 billion in 2023.
Just under $20 billion, also huge.
Yeah. Nigeria has one of the largest diaspora populations globally, so remittances are an incredibly significant source of foreign currency and household income there, too.
Yeah.
And one of our sources gives some important regional context here.
Oh, yeah.
It states that Nigeria's $19.8 billion inflow, that accounted for a substantial 38% of the total remittance flows recorded for the entire sub-Saharan Africa region in 2023.
38%. Just to Nigeria.
Just to Nigeria,
Yeah.
dominating the sub-Saharan total. The sources also note Nigeria's figure saw a modest but important 2% growth that year, so still trending upwards.
That's interesting. Egypt leads for the continent overall, but Nigeria dominates the sub-Saharan Africa total. Okay, number 3.
That's Morocco, receiving $12 billion in remittances in 2023.
$12 billion.
The sources describe these funds as a critical lifeline for many Moroccan households, helping meet essential needs, daily expenses, covering unexpected costs. And this substantial inflow also plays a big role in driving local economic activity across Morocco.
Okay. Moving down the list then, number 4 is Kenya.
Kenya received $4.8 billion in 2023. This figure reflects the strong, active ties between the Kenyan diaspora and folks back home.
$4.8 billion. How is it typically used there?
The sources note that funds sent to Kenya are often channeled into really key, impactful investments at the household or community level. So significant amounts go towards education, paying school fees, university fees, also covering healthcare costs, and crucially being used to seed and invest in small businesses.
Right, that entrepreneurial aspect again.
Exactly. And Kenya's remittance inflow also saw healthy growth, increased by 3.8% in 2023.
Good to see that growth. Okay, number 5 is Ghana.
Ghana recorded $4.6 billion in remittance inflows for 2023, very close to Kenya's figure.
$4.6 billion.
According to the sources, these contributions from the Ghanaian diaspora are really significant for bolstering livelihoods across the country. They also play a vital role in supporting and stimulating economic activity in various sectors within Ghana. And Ghana also saw robust growth, a notable 5.6% increase in 2023.
5.6% growth. Nice. Okay, let's look at the second half of the top 10. Number 6.
Number 6 is Senegal. Their diaspora sent back $3.0 billion in 2023.
$3 billion.
These funds are highlighted as being crucial for family sustenance, just ensuring basic needs are met for many households. But beyond just direct support, the sources indicate these remittances also contribute to community development projects, suggesting, collective efforts being supported by funds sent home.
Interesting. Community projects. Okay, tied with Senegal, and number 7 is Zimbabwe.
Zimbabwe also received $3.0 billion in remittances in 2023, tied exactly with Senegal.
$3 billion there, too.
These funds provide absolutely essential support for many families. especially given the economic challenges Zimbabwe has faced over the years. The sources note remittances have become this important, consistent source of income that also supports local businesses, helps them stay afloat, stay active in the economy.
Right, a real stabilizing force, perhaps. Okay, number 8 on the list.
Number 8 is Zambia. Their diaspora contributed $2.8 billion in 2023.
$2.8 billion.
The sources state these funds are primarily used for direct household support, making sure families can cover day-to-day expenses, manage their finances, and similar to other countries on the list, they also contribute to community-level initiatives, reflecting that broader impact beyond just individual households.
Okay, getting towards the end now. Number 9.
Number 9 is Uganda. Received $1.49 billion in remittances in 2023.
Just under $1.5 billion.
This amount is described as essential for boosting household incomes across Uganda, providing a vital financial lift for families. And furthermore, the sources highlight its importance for small-scale business growth within Uganda, providing needed capital for local entrepreneurs.
Okay, and rounding out the top 10, number 10 is
The Democratic Republic of Congo, the DRC, completed the list with $1.3 billion in remittances in 2023.
$1.3 billion.
These funds are crucial for helping families meet basic needs in a country that has faced, well, significant challenges. The sources also point out this money supports local economic activities, providing necessary financial injections at the ground level to help communities function and develop.
It's really striking seeing those numbers laid out, concentrated in specific countries.
Yeah.
It just highlights those deep ties, the sheer volume flowing to these particular nations. And while this list focuses on the top recipients globally among African countries, one of our sources had an interesting point about senders within the continent itself, didn't it?
That's a very important distinction to make. Yeah. While much of the story focuses on the diaspora, sending money to Africa from, the UK, France, the US, the Gulf states.
Right. The traditional image.
The statistics source we looked at points out that South Africa is actually the largest sender of remittances to other African countries.
Ah, interesting. Intra-African flows.
Exactly. This piece of data reveals this significant level of migration within the continent and the robust financial support networks that exist between different African nations, often driven by labor migration within Africa itself, that stands alongside those larger global flows we've been talking about.
That's a great point. Adds another layer of complexity. Shows the interwoven nature of economies and migration even within Africa itself. Okay, so we've established the massive scale, the resilience, the direct impact, and where the money's flowing. But given its importance, what are the challenges? What stops Africa from fully leveraging this potential? It can't all be smooth sailing, right?
Oh, absolutely not. Despite the incredible significance, the potential of remittances, there are substantial obstacles, well-documented ones, that prevent African countries and families from fully harnessing the positive impact. Our sources are pretty clear and consistent in identifying these barriers.
And the one that seems to come up most often, the one that hits recipients most directly, is the cost, right? The cost of sending the money.
Yes, high transfer costs remain a major drain on the value of remittances. Every dollar, every euro that gets eaten up by fees, that's money that doesn't reach the family for food or school or health care.
How high are we talking?
The sources mention that in 2023, the average cost of sending money through mobile apps to Africa was around 5% of the total amount sent.
5%. Even on mobile, that still sounds quite high.
It is. And while mobile apps are often presented as cheaper than the traditional cash agents, 5% is still a significant chunk when you're talking about sums that are vital for survival. Now, there's a note that costs were lower in West Africa, closer to maybe 3% for mobile, which is better.
Better, but still.
Still, the overall cost issue across the continent remains a significant challenge for senders, and it directly reduces the amount received by families. The theme of the International Day of Family Remittances this year actually highlights this directly.
Oh, yeah. What was the theme?
Digital remittances towards financial inclusion and cost reduction.
Yeah.
It points right at the problem and the desired direction.
So even with newer digital methods, costs are still a barrier. And I imagine those are just the formal costs. What about how people are actually sending the money? You touched on informal channels earlier.
That leads directly to another major challenge, the prevalence of informal channels, cash-based transfers. Why do people use them?
Yeah, why, if they're maybe riskier?
Well, the sources explain that the formal remittance market across Africa is often characterized by this patchwork of differing policies, regulations, requirements across regions, even between neighboring countries.
Patchwork, meaning inconsistent.
Very inconsistent. Things like different ID requirements for senders and receivers, varying transaction limits depending on the method or the country, complex licensing rules for money transfer operators. It creates a market environment of, and this is a quote from the sources, formidable complexity.
Formidable complexity.
Okay.
And that complexity pushes people toward simpler options, even informal ones.
Exactly. That complexity and the costs that often come with navigating the formal system, it drives customers, both senders and receivers, to use simpler, quicker, or what they perceive to be cheaper informal alternatives.
Like sending cash with someone traveling.
Yeah, sending cash with travelers, using informal networks, methods that just bypass official financial institutions altogether. But, and this is crucial, the sources point out the significant risks that come with these informal methods.
Like what?
Less security, obviously. They're more prone to loss or theft or fraud. And critically, they aren't tracked. This lack of data on informal flows is a major challenge in itself, which we'll definitely come back to because it means policymakers just don't have a full picture of the total remittance landscape.
That makes perfect sense. If the official way is too hard or too expensive, people find workarounds, even if they're riskier. What other sort of structural or systemic hurdles do the sources mention?
They also point to other significant challenges. Stringent regulatory barriers can still exist in places, hindering the smooth, rapid flow of money across borders. Many areas suffer from underdeveloped financial sectors.
Meaning not enough banks or services.
Right. The necessary infrastructure, banks, payment systems, financial service providers isn't robust enough or widespread enough to efficiently handle these flows and connect recipients to broader financial services. And linked to that is limited financial inclusion. That's a major problem.
The unbanked population.
Exactly. Many potential recipients, especially in rural areas, are unbanked. That makes it difficult for them to access or fully use formal remittance services or even the potential benefits that digital payments could offer. And finally, just basic inadequate technological infrastructure in some regions.
Like poor internet.
Poor internet connectivity, unreliable electricity. That's a foundational barrier, especially when we start talking about leveraging digital solutions fully.
These challenges, they paint a picture, don't they? A system that, despite the massive volume of money, is still constrained by costs, complexity, lack of infrastructure, regulatory friction. It really highlights that for remittances to reach their full potential, the whole environment needs significant improvement. It needs to be more accessible, affordable, safer for everyone involved.
Precisely. And addressing these barriers, well, that's where the opportunities lie, particularly in the realm of digital technology.
Ah, yes, the digital leap forward. The sources seem to frame this as not just an opportunity, but potentially like a game-changing evolution for remittances in Africa.
It absolutely is presented that way. While yes, we have to acknowledge that costs for digital methods, averaging around 5% for mobile, they still need to come down further.
Right.
The sources clearly state that digital remittances, particularly those using mobile money platforms, have emerged as the most cost-effective way for families to send and receive money, especially when you compare them to the traditional agent-based cash methods.
So even at 5%, it's still better than the old ways, cost-wise.
Generally, yes. And that cost advantage, even at the current level, is a significant driver pushing people towards digital adoption.
What other factors are fueling this growth in digital remittances beyond just the cost?
Several forces are really driving this transition. A major enabler is the widespread development and the increasing adoption of user-friendly mobile apps.
Apps designed for basic phones, too.
Exactly. They're designed to be intuitive and crucially compatible, even with the basic smartphones that are becoming more and more common across the continent. And what that means is that digital remittance services can reach areas, reach populations far beyond the limited footprint of traditional, bricks and mortar banking infrastructure.
So people in remote villages, maybe without a bank nearby, can get money on their phone.
Potentially, yes, directly onto their mobile phones, even if there are no bank branches or formal money transfer agents for miles around.
The tech makes the reach wider, access easier. And it seems this digital transformation isn't just about the transfer itself, is it? The sources talk about opportunities that open up beyond just sending and receiving the money.
Exactly. And this is perhaps one of the most exciting aspects highlighted in the sources, the potential for digital remittances to act as a kind of pathway, a pathway to broader financial inclusion.
How so?
Well, once the funds arrive digitally into a mobile wallet or a digital account, they open up a range of possibilities for recipients who might have been completely unbanked before.
Like what sort of possibilities?
The sources mention opportunities to provide guidance to local communities on basic financial management, knowledge about budgeting, saving, other sound financial practices.
So it's like getting a digital financial literacy lesson along with the money.
Sort of, yeah. And importantly, these digital platforms allow for partnerships. Partnerships between the money transfer operators and local financial institutions.
Okay. How does that help the recipient?
Well, these partnerships can leverage the digital remittance flows as a kind of financial history, almost like a credit score for recipients. And that allows previously unbanked individuals to access other crucial financial services they were locked out of before.
Such as?
Such as microcredit for small emergencies or maybe business needs, insurance products to protect against shocks like illness or climate events, and formal savings accounts to build resilience and plan for the future.
Wow. So receiving a digital remittance isn't just an endpoint. It can actually be a gateway to a whole suite of financial tools.
Precisely. And this increased integration into the formal digital economy, it can also facilitate community reinvestment in more structured ways.
How does that work?
Digital flows are just easier to aggregate, to track, and potentially channel towards collective goals. They can be reinvested locally through digital payment systems, funding small businesses, supporting local farmers, maybe contributing to community infrastructure projects.
Keeping the money local.
Yeah, it stimulates economic activity, keeps the money circulating within the local economy, helps create jobs right where the funds are received.
That vision, digital remittances, driving financial inclusion, local reinvestment, it sounds incredibly promising. But you did temper the optimism earlier, mentioning the digital divide. Is that still a significant hurdle, even with mobile use growing?
Yes, it is absolutely crucial, as the sources remind us, to temper that optimism with the reality of the persistent digital divide.
Still a major issue, then.
Definitely. While smartphone penetration is growing, vulnerable populations, particularly people in the most remote rural areas or those with lower literacy levels, they may still lack the necessary internet access or reliable electricity or the digital literacy skills or even just a compatible device to fully benefit from these digital remittance services and the financial inclusion opportunities that come with them.
So some people are still being left behind by the digital shift.
Exactly. There remains this pressing need to ensure the digital transition is genuinely inclusive, making digital solutions truly affordable, widely accessible, and seamlessly integrated into an ecosystem that leaves no one behind.
Okay. So how do governments and partners accelerate this transition towards digital, but also ensure the benefits are widespread, equitable? The sources highlight several key enablers, right? Things that are necessary.
They do. The first, and it's foundational, is investing in technological infrastructure.
Building the digital highways, so to speak.
Exactly. Governments need to prioritize significant investments in building robust digital infrastructure right across the continent. This means expanding internet access, especially in those underserved rural areas, enhancing cybersecurity measures, that's crucial for building trust in digital platforms, and fostering innovation in financial technologies, in fintech.
Supporting startups.
Supporting fintech startups and companies that are developing tailored solutions for the African context. Things like user-friendly mobile wallets, efficient payment gateways, maybe even exploring technologies like blockchain for transfers, which could potentially lower costs and increase transparency.
Okay, so build and secure the infrastructure. What's the next key enabler?
Policy and regulation. Absolutely crucial. Governments must actively work to foster a conducive legal and regulatory environment, one that encourages the growth and adoption of digital remittances.
How do they do that?
Well, it involves enacting clear, proportionate, consistent policies and regulations that encourage healthy competition among the digital service providers. Competition is really key to driving down costs for consumers.
Right. Competition lowers prices.
But at the same time, the regulations must ensure robust consumer protection for both senders and recipients, building trust in digital channels, safeguarding users against fraud or exploitation. And going back to what we discussed earlier, harmonizing regulations across borders is vital here too, to reduce that complexity that drives informal flows.
Okay. Infrastructure, policy. And finally, since this is fundamentally about people, there's the diaspora engagement piece.
This is vital.
Yeah.
Because the flow starts with the diaspora, right?
True.
The sources suggest governments and organizations need to actively engage with the African diaspora communities living abroad. This means creating new, effective platforms for dialogue, understanding their needs, their challenges in sending money, and actively providing incentives for them to use formal remittance channels, especially digital ones.
How? By showing the benefits.
Highlighting the benefits, yeah. Lower costs, faster delivery, increased security. And crucially, it involves keeping the diaspora informed about the tangible developmental impact their remittances are having back home. Reinforcing that connection, encouraging continued use of official, trackable channels.
So by focusing on these three things, infrastructure, regulation, and engagement, the digital potential of remittances can really be unleashed.
That's the argument. Making them even more integral to economies, a stronger, more efficient lifeline for African families. It's about strategically embracing tech advancements, cultivating partnerships, and just systematically dismantling those accessibility and cost barriers.
This potential for digital transformation is huge, especially for financial inclusion, getting the unbanked into the system. But for governments and organizations to actually implement the policies, make the investments needed to leverage these flows, leverage the digital shift, they need something fundamental, don't they?
They do.
A clear, accurate picture of what's actually happening on the ground. And that brings us to another critical theme highlighted in the sources: the absolutely indispensable role of robust statistics, reliable data.
Data is, quite simply, the foundation for sound policy, for effective intervention. This point is really strongly emphasized in the sources, especially mentioning African Statistics Day, which highlights why data matters for development.
Right.
The sources state unequivocally, modernizing data systems for remittances is vital. Absolutely vital for informing the policies, the strategies needed to improve the lives of African migrants and their families, and to maximize the developmental impact of these flows. Policymakers just cannot make effective, targeted decisions without reliable, timely, granular statistics.
Okay. So if data is so crucial, what's the current state of the data landscape for remittances in Africa, according to the sources? What are the problems? Is it good enough?
No. The current situation, as described in the sources, is far from ideal. It's characterized by those challenges we touched on earlier, the patchwork of different policies and regulations across countries.
Yeah, the inconsistency.
It creates a complex environment that makes consistent data collection really difficult. And as we noted, it pushes some transactions into those informal channels that are inherently untraceable.
Okay. What specific data gaps do they mention?
The sources detail several specific critical data gaps and issues. There's a significant lack of standardization, lack of harmonization in how data is collected and reported across different African countries and among the various institutions involved.
So everyone's measuring differently.
Often, yes, or using different definitions. There are methodological challenges in accurately capturing the total volume, the nuances of all remittance flows, especially given that mix of formal and informal methods. Critically, there are significant data gaps for several countries.
Like no data at all for some.
Or very unreliable, outdated figures for remittance inflows for some nations. We simply don't have a good picture. It's also often difficult within current data systems to accurately differentiate remittances from other types of international payments, which could lead to misclassification.
And there's that specific type of data gap you mentioned earlier that the sources flagged as particularly critical and problematic.
Yes, that's the critical lack of sex-disaggregated data.
Data broken down by gender.
Exactly. Data showing how much money is sent by women migrants compared to men, or how much is received by women compared to men. The sources are really emphatic about this. Remittance sending and receiving behavior is highly gendered.
How so?
Well, women migrants might face different economic situations. They might send money for different purposes or with different frequencies than men. And women recipients within households, they often prioritize using the money differently, maybe more on essentials like education, health, food.
Right.
Without this specific breakdown by gender, policymakers are essentially operating blindfolded to a huge part of the reality. They're missing critical insights into how remittances are impacting different members of society differently.
So why does all this matter? What are the real-world consequences of these data gaps, these deficiencies?
The consequences are pretty far-reaching. They negatively impact several key areas essential for development. Firstly, it severely hinders effective policymaking.
Because they don't know what's really happening.
Exactly. Decisions aren't based on a full or accurate understanding of the reality, who's sending, who's receiving, how the money's used. It impacts transparency, financial stability too, because flows that aren't fully tracked are harder to monitor.
And financial inclusion.
It limits financial inclusion, because policymakers lack the detailed data needed to design targeted financial products or programs that can effectively reach specific low-income populations or vulnerable groups, like women recipients, who rely heavily on remittances. It also affects financial integrity. Consumer protection untracked flows are harder to regulate, harder to protect people from fraud or excessive fees.
So the message is pretty clear from the sources.
Very clear. Without reliable, granular statistics, policymakers are just insufficiently equipped to make sound decisions, especially regarding critical areas like deepening the financial sector to serve the poor, or reaching low-income populations effectively with the financial services they need.
So the absence of good data isn't just some academic problem. It directly prevents effective action that could help millions of people. Conversely, then, what becomes possible with better, more accurate data? What could be achieved?
The sources detail what could happen if these data gaps were closed. With accurate, timely, granular, and disaggregated statistics, governments gain the essential toolset for progress.
Like what tools?
They can formulate more effective, evidence-based policy frameworks, tailored to the specific needs and patterns of remittance flows in their countries. This enables genuinely evidence-based decision-making, rather than relying on guesswork or incomplete info.
Measuring results, too.
Allows policymakers to accurately measure the results and impact of public policies related to remittances or financial inclusion. Better data also empowers private sector development, helps financial institutions, fintech companies, design products and services that truly match the needs of migrants and recipients.
Building capacity overall.
And more broadly, just improving the capacity to effectively collect, analyze, and use this data is fundamental for overall development capacity building within African nations.
Okay. Are there active efforts underway, then, to tackle this data problem, to build this capacity?
Yes, there are efforts, and the sources highlight some key initiatives. They specifically mention the role of organizations like UNCDF, the United Nations Capital Development Fund.
What are they doing?
They're actively engaged in regional efforts to enhance the accessibility, the comparability, the granularity, the accuracy of remittance data across Africa. One concrete example cited is their work with IGAD, the Intergovernmental Authority on Development.
Right, the regional body.
In October 2022, IGAD approved a roadmap specifically focused on the regional harmonization of remittance policies among its member states. The core goal of this roadmap, to tackle those inconsistencies, those incompatibilities between national policies and regulations that, as we said, contribute to complexity, delays, high costs, and also hinder data collection.
So harmonizing policies helps data collection, too.
Exactly. And UNCDF and IGA are providing technical assistance directly to the central banks in these member states, helping build their technical capacity not just to collect, but also to measure and analyze remittance statistics more effectively.
Okay, so there are regional efforts recognizing the cross-border nature of this. What else needs to happen for this data revolution that the sources are calling for? What are the recommended next steps for governments, for their partners?
The sources outline several clear actions. First, governments need to really undertake a thorough assessment of their existing national frameworks for remittance data collection. Pinpoint exactly where the gaps and needs are.
Know thyself, basically.
Sort of, yeah. Second, they should actively connect with and learn from the experience of central banks, statistical agencies in other parts of the world that have more advanced, or maybe just more appropriate, international transaction reporting systems. Understand global best practices.
Learn from others. Makes sense.
Third, there's a strong recommendation to automate processes. Automate the extraction and compilation of granular data using technology. System-generated statistics are highlighted as potentially being broader in scope, deeper in detail, more reliable, faster to get, and cheaper to produce than manual methods.
Automation seems absolutely essential for getting that level of detailed data we need.
It really is. Fourth, once the data is collected, governments and partners need to actively leverage its power.
Use the data.
Assemble it, analyze it, share it to actively inform and improve policymaking and business outcomes. And this is where closing that specific gap in sex disaggregated data is reiterated as particularly crucial. Understanding the gender dynamics is vital for effective, inclusive policies.
Okay. And fifth,
And perhaps most fundamentally, the sources call for a transformation of the entire system. This involves collaborating closely with technology companies that have experience building modern data systems, ensuring the systems implemented are designed to match the real-world needs of regulators, reporting entities like banks and mobile money operators, and the market itself, all with the ultimate goal of better serving migrants and their loved ones.
The sources use a strong term here, don't they? They talk about needing a paradigm shift. What does that mean? What does that radical overhaul actually entail in the context of remittance data?
A paradigm shift, yeah. It means moving beyond just counting the total amount of money flowing in. It signifies a radical overhaul of the existing systems, the processes, especially in the least developed countries, to enable the systematic collection and sharing of highly disaggregated data.
Disaggregated across what?
Across a whole range of parameters. This level of detail means collecting data broken down not just by country totals, but by the specific channel used for the transfer. Was it mobile money, a bank, an agent? By the sex, the age, even the location, urban versus rural, both the sender and the recipient. And where possible, even by the stated reason for the transfer.
Wow. Getting that level of detail, channel, sex, age, location, and reason for transfer, that sounds incredibly complex to collect, but also potentially incredibly revealing about the lived reality of these flows.
It is complex. It requires significant investment in technology, in capacity building, no doubt.
Yeah.
But the sources argue this level of detailed, disaggregated data is essential. Why? Because it can offer, and this is a quote, a revelatory picture on a macro scale of the actual lives, the economic behaviors, the struggles of migrant workers and their families back home.
A revelatory picture? How?
Knowing precisely who is sending, who is receiving, where the money is going within a country, how it's being sent, and ideally why it's being sent, that provides the granular insight necessary for developing truly inclusive public policies. It allows for the design of financial products, services that genuinely meet the specific needs of different segments of the population. And it provides that clear evidence base that could potentially attract more targeted inward investment into specific regions or sectors within poorer countries.
There was another quote capturing that sentiment, wasn't there, about overhauling policies?
Yeah, a powerful one. African policies and processes need to undergo a radical overhaul for a data revolution.
A data revolution.
To sustainably leverage digital technology to collect, monitor, and analyze granular data on remittance markets, reducing costs and improving overall efficiency.
That quote really ties the data revolution directly to leveraging digital tech for tangible outcomes.
Yeah.
Lower costs, better efficiency.
It does. And the sources reiterate the commitment of organizations like UNCDF to supporting this data revolution, emphasizing its non-negotiable importance for evidence-based decision-making. They stress that reliable, granular statistics, they're not just technical requirements. They are fundamental building blocks for designing effective public policies, supportive digital product development that can genuinely contribute to harmonious social development, economic prosperity across Africa. Without the data, even the best intentions can just miss their mark.
Okay. Wow. We have taken a truly deep dive into the world of remittances in Africa, guided by this really comprehensive stack of sources.
We really have. We've seen the sheer, incredible scale, haven't we? And the direct impact of this flow of money. How it dwarfs traditional aid and investment, how it proves remarkably resilient even in really challenging times.
Right. So you now understand how this money translates into real-world support for families, funding essentials like education, healthcare, housing, while also bolstering national economies through foreign exchange, stimulating local activity.
But we've also thoroughly explored the significant challenges that still exist, including that persistent drag of high transfer costs, the risks, the opacity of informal channels, and those systemic hurdles, regulatory complexity, inadequate financial and technological infrastructure.
Yeah, those are big hurdles. And crucially, you've seen the massive potential held by digital solutions, like mobile money, not just as a way to maybe reduce costs, but as a vital pathway to broader financial inclusion, supporting community reinvestment right from the ground up.
And finally, we've unpacked the absolutely critical need for better data. More standardized, harmonized, and especially that disaggregated data, breaking it down by gender, channel, etc. That's the fundamental requirement to inform sound policies, measure impact, and truly leverage the potential of both the remittances themselves and the digital technologies used to manage them.
Ultimately, the story of remittances in Africa, as revealed by these sources, it's just a profound illustration, isn't it, of the power, the generosity of individuals in the African diaspora.
It really is. A testament to their resilience, their commitment, driving change and providing essential support from the ground up, one transaction at a time.
It highlights that a significant, maybe the most powerful engine of development on the continent is often fueled by the deeply personal collective efforts of people just caring for their families, their communities, across borders.
It's quite something to think about.
So here's something to consider then, based on everything we've discussed, everything we've learned from these sources today. If remittances, despite facing all these significant challenges we've laid out, high costs, regulatory complexity, the prevalence of risky, informal channels, a persistent digital divide for some, and most critically, those substantial data gaps that obscure the full picture and hinder effective policy.
Right. If, despite all those limitations, these flows are already the continent's largest external financial injection, already a primary resilient engine of grassroots development.
Yeah.
What could possibly be the true unleashed potential of this incredible financial force if those challenges were systematically fully addressed? Yeah. Think about the exponential scale of that possibility. The speed of development, the depth of financial inclusion, the resilience of communities, all fueled entirely by the agency, the hard work, the profound connection of people supporting people.
Operating within an efficient, affordable, and truly data-driven ecosystem, what would that look like? That's something to really mull over.